Hello and welcome everyone to TwinRock Partners webinar on the Digital Liquidity Fund for Commercial Real Estate. Thank you for taking time out of your busy day to be here. Please note that everyone has been muted for the time being. You'll see a Q&A tab at the bottom or top of your screen. Please feel free to submit questions throughout the presentation and I'll answer them at the end. There's also a raise your hand button. During Q&A, you can hit that button and ask me an audio question. Just note that all participants will hear you. Before we begin, all statements made here are forward-looking and simply the opinion of TwinRock and the managers. Let's jump right into the opportunity of this fund and how it differentiates itself from other offerings in the market. Our goal is to disrupt real estate investing by providing liquidity to commercial real estate through the option of converting investor interest to digital shares. Currently, the fund is structured as a private placement 506C, and membership interest comes in the form of limited members. If investor interests are converted to digital shares, the shares should become tradable. This would allow for fractionalized ownership interests to investors that couldn't otherwise gain access to private real estate funds while providing liquidity to all investors. Also important to note that if the fund does not convert, there will be a 3-year lock period, then fully redeemable with 12 months notice. So essentially a 4-year lockup period. We're also providing increased transparency in the fund by striking an initial NAV at the time of conversion or after the lockup period ends. From that point on, we'll provide quarterly NAV updates. Now to touch on the fund's investment strategy, it's threefold. First, we're looking at purchasing triple net lease properties that have financially strong tenants and that have guaranteed the lease for at least 8 years or more. That should do a couple things: provide certainty of cash flow, minimum management, and the ability to weather a future recession. So it's TwinRock's opinion that we may be in some of the later innings of the real estate cycle, not at the end, but in order to hedge that, we are looking at triple net lease properties. For those of you that don't know the term, it means that the tenant is solely responsible for all expenses, including but not limited to repairs and maintenance, utilities, property tax, insurance, and sometimes for the replacement of mechanical, parking lot, or the membrane of the building. Second, we're looking to purchase multifamily in markets that we have existing operating experience. So those are Nevada and Oklahoma. We have personnel in both states and have been in Nevada for 7+ years and in Oklahoma for 5+ years. Lastly, student housing in select supply constrained markets. Actually, one of the seeded funds in this offering is our property in Fayetteville, Arkansas, which leads me to the next slide here. So the fund has been seeded with 2 properties with strong financials from TwinRock Partners. The first, the row at Arkansas, has a 12.3% net IRR to investors on an 8-year timetable, and the flats on May has a 13.2% IRR, and that's on a 6-year timetable. In addition to providing strong returns, there are other benefits to joining a fund that already has assets, including diversification, immediate diversification. So you've already got a multifamily and a student housing property in this fund. Quicker cash flows. These are owned and operated by TwinRock Partners, so we're pretty confident when they'll start cash flowing and when we can start passing that through to investors. They're in our target markets, so Arkansas is a secondary market. Oklahoma City is definitely one of our primary markets. And last, increased transparency. So these, again, are 2 properties that are already owned by TwinRock Partners, so we feel confident in our strategy moving forward. They've both been contributed at recently appraised values that were conducted by CB Richard Ellis. And if you go on our investor portal, we have provided those appraisals as well as executive summaries of both of these offerings. Also important to note, we had planned to seed the fund with an additional property from TwinRock Partners named Yaletown Apartments. It's a 544 unit complex in Tulsa, Oklahoma. And we recently had that appraised at $21.5 million. We received an off-market offer in September for $27 million. So we're actually closing on that property and returning, either returning capital to investors, or we are looking at a potential 1031 exchange rollover. Important though that it was appraised at 21.5, and just months after we received an offer for 27 million. So we think there's the same kind of value in these two properties, which have been seeded in Digital Liquidity Fund, and it's possible that additional assets owned and operated by TwinRock could make it into the fund. This 1050 West Hampton would be the financials on a property that we would potentially look to put in the fund. So this is a triple net lease property in right outside of downtown Denver, near Greenwood Village. So this property has a lot of the features that we look for. It's got, again, that weighted average lease term of 8+ years. So they're called WALTs. Today's low interest rate environment allows projects like this to be levered up to about 60% loan to value, and at a 3.5% fixed financing for 10 years. That would provide investors an average 8% cash on cash return and a 12% cash on cash return with equity buildup over 10 years. Greenwood Village is a great place for those of you that have been in Denver or out to that area, full of young professionals, great retail and restaurants nearby, and right on the way to Colorado Springs, another market that's continuing to grow in downtown Denver. Inter Park Industrial Center, just another example of a property that we'd look at purchasing, a little bit larger than 1050 Hampton. This opportunity has a projected cash on cash return that starts at about 6% in year one and builds to an average of 8% cash on cash return, with that 12% cash on cash plus equity buildup over 10 years. So another property, this is in Broomfield, Colorado, so kind of the opposite direction as 1050, right between Boulder and Denver, and another opportunity we would look at putting in the fund. To touch on TwinRock as the sponsor and management, TwinRock was founded in 2006, and together with its principals, invested nearly $750 million in real estate with high net worth, ultra high net worth, family offices, and institutional partners. We employ approximately 50 employees between our corporate and property management company, with representatives in California, Nevada, and Oklahoma. Our corporate office is in Newport Beach, California. And between Mike and Alex, they have a combined 80+ years of real estate experience. So they've been doing this for a long time, and we're excited by this new opportunity. Their bios and kind of their past is on our website, as well as a lot of our marketing material. So to run through some of the overview of this opportunity, is for accredited investors only. Minimum is $25,000. The 8% preferred return is something that we've had for all of our deals, and we believe that, combined with the low asset management fee, really aligns us with the investors. So 8% cumulative preferred return year over year before TwinRock Partners starts participating in the gains. And at that point, it's 1% catch up to us as the manager, and then an 80-20 split thereafter. So just to reiterate why you would think about investing in Digital Liquidity Fund for commercial real estate. First would be the liquidity to investors versus traditional private placements. So as I mentioned, after the investment period ends, there's potential for liquidity in as little as 12 to 36 months, and that would depend on us converting shares to digital shares and listing on a digital exchange. If not, then there's a 3-year lockup period and then redeemable after 12 months, so really a 4-year lockup period. The second would be that the fund is seeded with current assets owned and operated by TwinRock Partners. So this is not a blind fund. There are assets already in the fund. Like I mentioned, you can find specific details for both those properties in our investor portal. Third, we're going to provide quarterly NAV updates and annual audits on the fund after that investment period ends, after that lockup period ends, or when we convert to digital shares. So increased transparency there. We want to be as forthcoming with investors as possible. Fourth would be the management team. So again, Mike and Alex have been doing this a long time. You can also see on our website, we have investor testimonials up from others in the real estate space in Orange County. And we built a lot of relationships over the past 40, 50 years. And lastly would be the low cost structure and favorable investment splits. So again, 8% preferred return, and then a low asset management fee of 50 basis points. So with that, I will open it up to audio questions. Again, just hit the raise your hand button. Okay, and if there's no audio questions, don't see any questions in the queue. So that will conclude our presentation today. If you do have questions, feel free to reach out to me at joe@trp-llc.com, or you can contact me by phone, 949-356-6887. Thanks, everybody.